Welcome back to StockAnalytics.ai, the podcast that breaks down complex earnings reports into actionable insights. I'm your host, Anthony.
And I'm Cleo, your lead analyst. Micron Technology's FQ3 earnings are just out, and this is what you need to know.
Today, we're diving deep into Micron's fiscal Q3 2025 earnings, dissecting the numbers to understand what it means for investors.
Micron delivered a strong performance this quarter. Revenue came in at $9.301 billion, a substantial 36.6% jump year over year. EPS, that's earnings per share, which tells us how much profit the company made for each share outstanding, hit $1.68, representing an impressive 460% increase compared to the same period last year.
Wow, a 460% jump in EPS is phenomenal. That suggests significant bottom-line improvement. So, Cleo, was this a strong, weak, or mixed quarter overall?
This was undoubtedly a strong quarter for Micron. The headline numbers speak for themselves. The company's net income reached $1.885 billion, significantly contributing to the EPS growth. Their net margin of 20.3% shows they're keeping 20.3 cents of profit from every dollar of sales, indicating improved operational efficiency and pricing power in the memory market.
That's a healthy net margin, especially in a competitive semiconductor landscape. And what were some of the key highlights management mentioned?
Micron highlighted record revenue in FQ3 with growth observed across all their end markets. They specifically mentioned that revenue was up sequentially from $8.05 billion in the prior quarter and significantly up from $6.81 billion in the same period last year. This broad-based growth reinforces the strength of their performance.
That's good to hear. So it sounds like Micron is firing on all cylinders. Let's dig into the details. Now let's talk about profitability. How efficiently is Micron converting sales into actual profit?
Micron's operating margin came in at 23.3%. This means for every dollar of revenue, they kept 23.3 cents as operating profit before interest and taxes. For retail investors, this is a key indicator of how well management is controlling costs and reflects favorable pricing dynamics in the memory market.
A 23.3% operating margin seems pretty solid. How does that compare to previous quarters or industry averages?
While we don't have those comparative figures in this specific report, the improvement year over year and sequentially suggests a positive trend. We'll want to look at historical data and industry benchmarks for a more complete picture.
Makes sense. What about the cash flow situation?
Cash flow is a critical area, and Micron performed well here too. Operating cash flow hit $4.609 billion. This is the cash generated from the core business operations. Even more importantly, free cash flow, which is the cash left over after necessary capital expenditures, the money that can be used for dividends, buybacks, or debt reduction, reached $1.949 billion.
So, almost $2 billion in free cash flow. That's a significant amount of financial flexibility. What about their overall balance sheet strength?
Micron is in a strong position with $10.163 billion in cash and equivalents. This substantial cash reserve provides a comfortable cushion for future investments, research and development, or navigating any potential economic uncertainties. Shareholder equity also grew to $50.748 billion. Further strengthening their balance sheet. This indicates a healthy financial foundation for the company.
That's reassuring to hear. A strong cash position and healthy shareholder equity are always positive signs. So, with a strong quarter behind them, what's Micron's outlook for the future?
Management provided guidance for FQ425, and it's generally optimistic. They expect revenue to be around $10.7 billion, plus or minus $300 million. This suggests continued growth, albeit at a slightly slower pace compared to the previous quarter. They also project a gross margin of 41% to 42%, depending on whether we are looking at GAAP or non-GAAP figures. Operating expenses are anticipated to be between $1.2 billion and $1.35 billion.
So they expect to maintain healthy margins while managing expenses. What about earnings?
They project diluted earnings per share to be between $2.29 and $2.50, again, depending on GAAP versus non-GAAP. This indicates continued profitability, which aligns with their revenue and margin projections.
So, Cleo, given everything we've discussed, the impressive revenue and EPS growth, healthy margins, strong cash flow, robust balance sheet, and positive outlook, what's your final takeaway for investors on Micron Technology?
Micron's FQ3 results paint a picture of a company capitalizing on favorable market conditions within the memory sector. The impressive growth in revenue, profitability, and cash flow, combined with a positive outlook, suggests continued momentum. However, investors should remain mindful of the cyclical nature of the semiconductor industry and potential challenges like macroeconomic headwinds, input cost inflation, and geopolitical risks, as mentioned in the industry context. A deeper dive into Micron's full financial statements and competitor analysis would be beneficial for a comprehensive investment decision.
That's all the time we have for today's earnings analysis. Thanks for joining us on stockanalytics.ai.
Remember, this discussion is for educational purposes only and not personalized investment advice. Be sure to do your own research and consult with a qualified financial advisor.
Subscribe to our channel for more institutional-grade earnings analysis. Until next time.